Dear viewers, this is an election special episode. I am recording this on 4th of June, the evening of counting of general elections. I am also taken aback with the way election results have come, with the way the markets have behaved. Yesterday, the Monday, 3rd June, the markets were seeing a short covering rally of 2,500 points on the Sensex. Today, markets are down by 5,000 points. Everybody is confused. Which kind of government is going to form? Which government is going to come? What may happen in the next few days? Nothing is known. Nevertheless, investment should continue, life should go on, the governance should continue. To know about what might unfold and to learn from the history, I spoke to Mr. Aashish Somaiyaa, CEO of White Oak Asset Management Company. Let's listen to his views in this episode. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about what might unfold in days, months and years ahead because of this result of this general election, I spoke to market expert Mr. Aashish Somaiyaa. Mr. Aashish Somaiyaa is CEO of White Oak Asset Management Company, a person with enormous experience in the market. He has seen several elections, decades of experience, and his words matter a lot. Let's listen to him, what he has to say about these election results. Aashish, welcome to this episode on NRI Money Clinic. What a day and what a flow of events. Till day before yesterday, everybody was making a comment that probably this is the first election in India where the results are pre-known and everything is predicted. And how did it pan out? Everybody got it wrong. Everybody got it wrong. The ruling party got it wrong. The opposition got it wrong. The pollsters got it wrong. Short sellers got it wrong yesterday. Today, the bulls got it wrong. There are only two people who predicted it right, Mr. Voter and Mr. Market. And for the first time, I see market and the elections are the ultimate deciders, and no one has a control on this. How do you see the situation developing from here onwards?
Yes, I think, it's a complete surprise. I think two things to keep in mind. One, yesterday or a couple of days back, I was interviewed by one of the newspapers, and there's an interview of mine which came, where I had mentioned that ultimately stock markets are driven by economic conditions and not necessarily by political dispensations. So, of course, I am also very surprised with what has happened today. I cannot claim that, we knew or anything like this. It's a surprise. But I just tell just for our viewers, I just explain to you why I said that. You look at it this way, that in 2004 also, that was more drastic, but similar thing happened in 2004. Where it was widely expected that Mr. Vajpayee's government, that time it was NDA, widely expected that Mr. Vajpayee would come back to power. But quite unexpectedly, NDA lost and Congress formed a UPA coalition. Now, this happened in May 2004. Now, let me just tell you the series. In May 2004, market was down circuit. Today it's some 5-6% down. But in 2004, when NDA lost power, market was down circuit, opened for half an hour, again down circuit, 20% down, market was closed for the day. So in 2004, market was down circuit because UPA came to power. In 2009, market was up circuit because UPA came to power. And in 2014, market was celebrating because UPA lost power. So what does this tell you? It tells you that the stock market, like you said, voter is supreme, and you also said stock market is supreme. I only exemplified it basically that the stock market doesn't seem to have political favorites. The stock market only votes for economic performance. So what happens is, if the economy is doing well, the stock market wants continuity. And the economy is doing badly, then the stock market wants a change. Now, today the stock market was hoping for continuity because people think that, economic conditions are good. It looks like we will get continuity. Of course, the jury is still out. We will know probably end of day today or something. It looks like the market will get continuity, but not of the kind of, one-way kind of thing which market was expecting. And hence, that's why the shock. The other important thing, obviously, is that instead of a single majority BJP government, if it is a coalition, then clearly, market will try to understand or assess what will be the priorities of the new government. So I think these are things to watch out for. But yes, days like today is what teaches a lot of lessons to everybody in the stock market.
Well, everybody has a blank face at the moment. Should I buy? Should I sell? Should I be on the bull camp? Should I be on the bear camp? You have spent so much time. You are in the helm of affairs. You understand how the markets perform and how investors get rewarded for the patience. Is it a time to take courage and participate in the market? Let's say that there is a change of government or the same government continues. The economic activities, the foundations which have been laid in the past years are giving fruits. Because a change of government comes in or the government has a slightly slender majority, nobody will unmantle their factories or undo all these things. It will go on. How should an investor position himself from here onwards? Should he just neglect the noise and continue with his SIPs? Or should he take courage and say that, okay, this is a great buying opportunity. Let me muster courage and put money into it. What's your message for the investing community at this point of time?
Every once in a while, there will be some such days. And that is the reason why we do our SIPs. So that has to continue. There's no circumstance or no reason why that has to stop. As far as the latter part is concerned, I would put it this way. So, I should not be saying something different just because the events have turned out this way. So let me wind back a little bit. If you really look at it, even before this whole thing started, I used to actually believe that the market has not gone that crazy. The point is that after a long period of time, we are getting double-digit nominal GDP growth. After a long time, we are getting sustained double-digit earning growth. And even now, if you see 5-year return, 10-year return, 15-year return, even 3-year return of Nifty in India is basically 14 to 15% compounded, which is its long-term range. So at least as far as large cap index or the frontline part of the market is concerned, I never thought it was crazily valued, really, if you ask me. Yes, there is froth in some SME, IPO, microcap and all that we should stay away from. So my base case was that market is not that crazily valued. It's not that frothy. So even till last week, I used to tell people that if I have my own 100 rupees, I would put 30 rupees before the election. And we got a fantastic pre-election rally. Today, of course, there is a decline. So if I had 100 rupees, I should not change the tune because market has changed. So I'm telling you transparently how I have been communicating. So if I had 100 rupees and I had put 30 rupees already, because few days back also index was 21,000. So out of 100, if I had already put 30 rupees, I would put today another 30 rupees. And then I would wait for the next few days. Why I'm saying this is because if there is a change in the format, see, there are two things. By the end of the day, the majority of NDA, let us say that, for some reason they are not able to form the government, some coalition partner deserts them, the opposition stitches up something. Let's say worst case scenario, the government changes. If government changes, then market will be weak for some time to come and market will reassess that how any alternate government forms. That is one. If there is no change of government, but it is pretty much the same government, but with a weaker majority and hence the support of coalition partners, the least that would happen is that there would be sector rotation in the market. If you see in the last couple of years, the market, especially after the war in 2022, the war gave fillip to energy, metal, commodities, etc. That gave fillip to public sector enterprises. And then, that spilled over to defense and railway and the government spending, etc. But last 2 years has all been about some conglomerates, about PSUs, about cyclicals, all those kind of things. And, private sector banks, consumer companies, pharma companies, all of that discretionary consumption, all of that has been laggards. So I would put it this way. If we have a continuity of this government, but with a weaker majority, the least you would expect is a sector rotation. What has gone up a lot in last couple of years would kind of cool off. Even if you see today on 4th of June, the broad market has declined, but the top gainers are FMCG companies and consumer companies. Even today, that tells you how people are thinking. So one, I would continue to participate in the market, but I would stay away from what has gone up a lot in last 2 years, and I would look for the relatively more attractive thing which has been flatlining for last couple of years. That is one. Second, in the opposite case where let's say the government itself changes, then I would wait for a few days and I would reassess how the market reacts to any change, if at all.
There are so many lessons for the investors also from this election. We talk about asset allocation. Probably it's time the politics also look at an asset allocation. There are no friends and there are no enemies. What kind of permutations and combinations will happen here, we do not know. So we think that party A will continuously be there. Maybe a small cap will continue to be there all the time. No, it will take a beating at some point of time. So probably this is a clear message to say that you should have an asset allocation in place. The events which happen around you, whether it's an interest rate scenarios, whether it's a war-like situation, whether it's an election, change of party, or be it anything, it's the asset allocation which makes you secure and gain from the events which will pan out. I do not think this government will not get formed. Very unlikely looks like to me. Opposition is fractured. They are lower in numbers. There is no cohesive leadership, nor there is a vision. Even if they stitch it out, I don't think it will last long.
Absolutely.
Very, very unlikely looks like that another alternative government can be formed. Very unlikely. Let's assume for a while that Modi 3.0 is here to stay, and let's debate. So our arguments may change in case if that doesn't happen and some other combinations happen. So a future is uncertain, both in the stock market as well as in the politics. So we'll keep everything open. Let's presume that Modi 3.0 is now a reality. Modi 1.0 was about repair works. So he inherited a very bad, bruised economy. Modi 2.0 was building a foundation of infrastructure, setting right the required reforms. They encountered resistance and everything. What do we expect in 3.0? See, we have a historical perspective of Manmohan Singh and Narasimha Rao government in 92 to next 10 years working on. And markets didn't do anything for the 10 long years. That's the first time that we saw 10 years Indian market not doing anything. And the following 5 years saw the entire fireworks. The incidences of the past are a guidance. We should see a fireworks in the stock market in the next 5 years. Ultimately, the markets are guided by the returns that the economy generates. So how do you see the events unfolding from here onwards?
Yes, so let's work with the, let's work with the more probable. I completely agree with you. The more probable case or the highest likelihood is that they continue. And of course, some pattern of government formation might change because there will be coalition partners. And those coalition partners also will need to be reflected into the cabinet and government formation and those kinds of things. The second thing to keep in mind, I still stand by what I mentioned earlier, which is that in the last couple of years, what happened was, because there was a lot of pronouncements about 2047, massive investments or, at least a one-sided push on industrialization, on manufacturing, on, more importantly, on infrastructure, roads, ports, railways, these kinds of things. And since COVID, it has been reported that there has been a kind of K-shaped recovery, meaning that, urban demand, high-end demand, demand for affluent things, those things has been rising, whereas the rural demand has been kind of suffering. What would happen is that if there is a coalition and if there are upcoming state elections, especially place like, say, Maharashtra, for instance, second largest state in the country. So what my sense is that because of this temporary shock to the market, like I said earlier, sectors which are related to PSU, defense, railway, all of those will take a breather, according to me. And the focus will move to the sectors which have relatively turned cheaper. So I think market will continue to reward investors. What we say about the next 20-25 years being India's growth story, I don't think that is going to change. Market will continue to reward investors. India as a relatively higher growth economy in the world, or the only economy in the world which grows 8% on a 4 trillion base. I think all of those, and the economy is growing 8%, it has caught momentum. Even to slow down, it takes time. Even if somebody deliberately goes upsetting, it takes time to upset really. There is a momentum to the economy. So I don't think the medium term to long term prospects are going to change. Market will continue to reward investors. I think in the near term only what will happen is that something which has gone up a lot and become expensive will take a breather, and market always works on relative valuations. So things which have actually been cheaper or things which did not participate in last couple of years, that will start to move. One more thing I want to draw your attention to. People will keenly look at the budget because that is probably a month away from now, month and a half away from now. And the third thing for India has been 2.5 years of FII selling. Ultimately, after all of this is over, after our election and our budget is over, people will keenly watch US policy and US election. Because for FII flows, for money to be invested in India, ultimately, whether dollar is strengthening or weakening, whether US is cutting rates, when they are cutting rates, by how much, I think the attention will start moving on to some of those things also.
Thank you very much, Aashish, for these inputs. There are few things which might get affected. See, for example, fund flows into the country or the current account deficit. See, there is a lot of work which has gone to make in India and the export push kind of a thing. So what do you expect in the next 5 years around the fund flows which are coming into the country, current account deficit, internationalization of rupee or dollar rupee equation, the broad trends as you see as a fund manager?
See, I think that clearly this government has a fabulous track record in terms of fiscal management. In fact, one of the things which has been most appreciated is that during COVID, there was a huge attraction for the government to really consider opening the purse strings and, just throwing money, etc. But obviously what the government did was to protect people in terms of food and those kinds of things. And they kind of supported the banking system to get by. So fiscal management, fiscal rectitude, these are things about this particular government which people have widely praised. The external macro management has also been widely praised. Like for example, when oil went to $129, sourcing oil from Russia, ensuring import bill is under control. There are many things about this government's fiscal management which has been appreciated. And I don't think that will change too much. It's just that if there are upcoming elections in large states, and especially if while you're forming the government, but you are getting a hit in places like UP, Maharashtra, etc. And it is widely reported that there is some amount of distress in the non-urban or the retail or rural or agri-based segments of the economy. So the compulsion to loosen the purse strings a little bit, I think that is something one would, normally that is how a market would imagine that they'll be forced to loosen the purse strings. I don't think that, so I think they'll be forced to compromise. Let's say on one hand, they have been just spending a lot on infrastructure. On other hand, they have been not throwing money on other areas. So maybe some of those priorities might change. The direction of spending, they might be forced to change. And while their track record is very good, let us see how they operate in the changed circumstances or under circumstances where they're forced to reprioritize some of the spending. I think that is something to really watch out for. Like I said earlier, not to repeat, but part of our external macro and part of our external pressure will change if US cuts interest rates. If for example, as is widely reported, there is some decline in inflation in the Western world. There is some history to suggest that there have been rate cuts in US just before their election comes up. If they were to repeat that pattern, and if their inflation were to behave or to maintain a particular trajectory, that is also something which is a very important input for how India's external environment and macro behave. I don't expect fiscal deficit. They have been on a path of fiscal consolidation and rectitude. So I would just look for reprioritization, but I don't expect them to become profligate or to veer off the path that they were following.
Now the sentiments have been affected because of this margin of victory and what was a brute majority expected, or what is a single party dominance of more than 272 seats. The new reality is that you have a minority government. Of course, it is the coalition which fought the election together. So to that extent, you can say it's a majority government. But sentiments are badly affected. But Mr. Modi has said that he has a 100-day plan ready, and he has made it into a 125 days plan. What kind of an initiation or the policy initiatives, if started in the next 100 or 125 days, would further boost the sentiments of the market and a bull run can be reborn?
So, like this 100-day plan and the government formation and the upcoming budget, let us say that, let us say, for example, they do not do anything to taxation because, there have been rumors of touching taxation. Now, if they, the market sentiment is impacted, if they start, tingling anything with the taxation. So if they do not touch taxation, I think that is great for the markets. Beyond that, if they show some kind of, determination to keep spending on infrastructure, to keep supporting manufacturing, segments of the economy. So while, it's like a fine line of balancing. So, you have to ensure that consumption picks up and the rural economy picks up, because some part of this thing is related to feedback on that. So if, for example, if they are just able to strike a fine balance between boosting up consumption on one hand, and at the same time not coming out as clearly deprioritizing investment and manufacturing. So they have to strike a balance. And like I said already, I think taxation, people want to just see that there is no and by the way, taxation in India is onerous actually, if you ask me about capital markets. So not only they should not increase, they should try to give some kind of relaxation. If you look at a simple, promoter or a, businessman, or even, any of the people who are participating in capital markets, after paying tax, companies have a post-tax profit. From that, they declare dividend, and then the dividend again gets taxed. So that is, there's no precedence to this. This is crazy, very high level of taxation. And plus, for shareholders, you have STT and you have long-term gains and you have surcharge and you have cess and so many things. So I think that if they review the taxation, for which there has been many complaints in the past, if they review that, they give signals to assure the market that, okay, there is, change of type of government, but at the same time, no deprioritization of industrialization, manufacturing or infrastructure spending, then I think, market will find its feet again and, resume its normal course.
I was watching the television debate for last 2-3 days before this carnage happened. We are recording this video on Tuesday dear viewers. People were telling that the Sensex and Nifty would double from here in next 5 years. If everything being equal, or let's say that this government gets its act together and it will not face a lot of hurdles and expected economic events will happen as expected, is it possible that the Sensex and Nifty can double from here? What kind of a CAGR required to double from here? Is there a precedence at any point of time in the history prior where the Sensex has doubled like this on because of certain events like this?
Also, Dr. Bhatt, if you really look at it, today as we speak, 5-year CAGR, 5-year compounded annual growth rate of Nifty, even today as we speak is in the range of 14 to 15% compounded. If you take 15-year history of Nifty, I can tell you, and this I'm quoting data as of last month end, even if you take 15-year history of Nifty 50 total return index, it is in the vicinity of 14 to 15% compounded. So long period, like 5 years, 10 years, 15 years, it is factually true that the Nifty index, total return index itself has compounded 14 to 15%. And that means that it has doubled in about, 5-year kind of time frame in the past also. So, and second thing is that even from here on, if somebody is saying that, you expect, like our founder Prashant was on television and he also says that he expects that in a 5-year time frame, index would double. That is a reasonable return of 14 to 15% compounded. Especially why is it reasonable? Because now our nominal GDP growth itself is double digit of about 13-14%. See, in the past we have suffered. Let's take an example of 2019. In 2019, the nominal GDP growth rate itself was only 6%. 4% real growth and 2% inflation. If your nominal growth is just 6%, then you expect that companies will grow their earnings at barely 7 to 8%, or maybe high single digit. If the corporate universe is growing the earnings at 7, 8 or 9%, that means some big companies are pulling it up and a vast majority of companies are struggling. That's how things play out. But when nominal GDP itself is growing double digit, it's not wrong to expect that earnings of companies will grow 15-16% or maybe slightly higher. And I think that is good enough to support the index movement. Like I have said earlier, I am not bearish. I just expect that the sectors which have pulled up the market in last couple of years, they might take a breather, and some other sectors which are relatively cheaper, they might actually come into the line. And if you ask me to specify, I would say I expect the lead to now come from private sector banks, consumer companies, consumer discretionary companies, those kinds of things, rather than just, PSU and railway and all going up all the time.
When you look at India, there are two Indias within one India. An affluent India, which is growing richer by the day, their income is rising, and there is another India which is struggling. It's a good news that wealth is being created. The stock markets are doing well. You are adding trillions into your GDP level. But unless the wealth also has to be distributed in an equitable manner, you can't leave a big chunk of the population unsaturated or don't take care of them. It can result in a political upheaval and you will not be able to keep pace with the economic progress. So what is that the government may do, the government of the day may do to ensure that the economic activity is not hampered, at the same time the fruits of this economic activity flows into the lower section of the society?
So, I think that the key points are related to job creation, obviously. I think jobs are being created. If you take all the statistics by the labor surveys, the the Employee Provident Fund enrollments, a lot of these things, they seem to suggest that job creation is happening. It has to obviously happen at a faster pace. The other important point is that in India, industrialization, manufacturing has picked up pace only in the last 3 years. I mean, just take an example. If you take electronics, if you take mobile phones or electronics, very many years we were net importers, whereas now we have become net exporters. Obviously, that is resulting in job creation. When so many, you get into any airport in India, I can tell you additional terminal buildings are being built. Runway expansions are happening. Railway lines are being built. Roads are being built. Obviously, that does not happen jobless. I mean, it needs job creation. It needs labor. If you go to any part of India today, buildings, real estate, whether it is residential or commercial or warehouses or retailing, they are being constructed left, right and center. Real estate has started to boom, right? Project announcements have also gone up. So the reality is that there is some lag effect. Jobs are being created, probably not at the pace at which one expects them to be created. The other important point is that, you cannot expect everything to urbanize and you cannot expect everybody to leave their village and start coming to a city and look for a job. So I think spending in the rural economy, that has to go up. I'll give you an example. When the budget, not the budget, but this, before the election, there was like a mini budget kind of thing which came up. And I found one of the journalists asking the finance secretary that, FMCG companies are reporting very, very poor sales and seems like the rural economy is in distress. Now, at that point in time, his answer was that, every time an FMCG company reports poor sales, it's not the government's job to stimulate the demand. Now, I think that's nice to say, but that doesn't seem to be practically helping. I mean, you should take all this when FMCG companies like HUL, when they report poor sales, you leave aside the company and its stock price, but you do take that as data point and you take that as feedback and see that, company which is doing half its sales by selling small sachet, why are people not even buying those sachets, right? So, of course, it is reporting rural distress. It is reporting poor performance on some parts of the economy. And I think that should be taken as feedback. So job creation is happening, but I think it's happening with a lag. It's nearly not enough. Maybe the government needs to do more there. And secondly, everybody cannot be looking for urban jobs. I think they need to figure out how to ensure the rural part of the economy also sees some amount of employment opportunities.
One thing which is very much required from any government which takes the reins is initiatives to ease for doing the business the easy way, ease of doing the business. We have a judiciary which is piling up the unsettled cases. There are tricky issues around land acquisition laws. The last time the farm laws became a disputed one and the government was forced to withdraw them. What do you expect in the next 5 years from the point of view of ease of doing the business?
See, I think that on ease of doing business, rankings of India as a country, the rules and regulations, setting up businesses, approvals, government support to large industries, many of these things have been on an improvement track, correct? But it's not like we are at the top of the emerging markets or top of the economies. So that is something which is, I would say, ongoing journey, and they need to keep doing more and more as far as ease of doing business is concerned. You can clearly see the fact that there are so many areas, where the government announced production-linked incentive, whether it is defense, whether it is electronic vehicles, battery manufacturing, whether it is chemicals, active pharmaceutical ingredients. There are many areas of the economy where the government has attracted investment, given production-linked incentive, and it is showing results. Like earlier, I quoted electronics and mobile phones as one area. So I think it is work in progress. And I don't see any let up on that. I think industrializing and giving boost to manufacture so that we can create more labor generating opportunities. I think that is something which is happening consistently. Maybe more needs to be done on it. And what is being done also, obviously it has to sustain without any breakage. I don't see any change in that. I think it's a journey and it would continue.
One last question for you, and my audience is also too much interested to know about this. Where should Indian income tax slabs should finally settle down? It's a wish list from our side. What the finance minister will do, it's his or her prerogative. But we have an expectation. Where do you think finally where we'll head towards this? At the moment, the tax is too much on the earning population there. Luckily, 1 year prior to the elections, they brought down from the top slab from 43% down to peak rate of 39%.
39.
Where should it finally settle down?
I really think, that it is like, it's not going to be equal or flat. They are moving in a direction of at least being equitable. But my sense is that if we are I don't think it would go much below 30 ever. I mean, at least in my lifetime or foreseeable future, I don't see it going too much lower, right? Maybe, I would be very happy if it is anywhere close to 30, right? That is one. If you ask me, my own feedback is related to, duplication and those kinds of things. Like I give you one example, that if you are an entrepreneur or a businessman, your company is paying tax on its income. From the tax paid income, you are paying dividend. Then the dividend is again being taxed. I may be a minority shareholder. I may not be an entrepreneur or businessman. But even if I'm a minority shareholder, I am part owner of that company. If the company is passing dividend to me from its tax paid income, how can you again tax me on that dividend? Second thing, again, I'll give you an example of duplication. It was very clearly said that the securities transaction tax is in lieu of waiving long-term capital gains tax. Now, you have introduced long-term capital gains tax, but you're not willing to relook at the securities transaction. Then there are many other examples. Like, for example, why should automobiles have 28% GST? If you look at in India, if you look at price of an automobile, you buy a 4 million rupee car. The cost of the car is barely 1.9 or 2 million. Everything else is just all types of taxes and cost escalations. So I think some of these things, because, we need to boost up the volume for automobile. We need to boost up the volume, like, for example, cement and all those kind of things. So I think we need to relook at duplication We need, of course, we are widening the tax base. That is great. But we need to relook duplication, and we need to relook at GST rates, because see, GST is hurting the lowest guy. I mean, the smallest guy on the street, if they are also hurting because of GST on so many things. Income tax is one side, but when you have expenditure related tax like GST, it hurts a wider area of the population. So I think all of these things need to be really relooked at. They have to keep expanding the tax base the way they have been doing, but then there has to be somewhere. If all forms of tax collections are just, growing rapidly, then at least, you would like to give some concession somewhere and reward the people.
Thank you, Aashish Bhai, for all these inputs. Let's hope that India gets a stable government, India gets a sensible government, India gets a government which takes care of every section of the society, industry, the man on the street, the population in the village, the downtrodden and the affluent and everyone. And let's hope our country prospers. Thank you very much for your inputs, your kindness to come on my channel and explain to my audience about what might unfold in the next 5 years. We remain in gratitude to you for your kindness, sir. Thank you very much.
Thank you. Thank you very much. Wish you all the best. Thank you.
Dear viewers, hope the conversation I had with Mr. Aashish Somaiyaa probably gave you an insights about way the events will unfold in days ahead. If it helped you to understand the market's movement, please do give me a thumbs up. If you are somebody who is yet to subscribe for my channel, my sincere request to you, subscribe right now and press the bell icon. Do not forget to share my videos with your near and dear ones, friends and relatives, and on all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another episode on NRI Money Clinic very, very soon.
Press the bell icon for more details and subscribe our channel.